So, welcome to the next episode of Trading Strategies. In the previous episode, we give a little brief introduction how we started, but in this episode, we will share our first trading strategies that we started to build up and our, let's say, experience with those strategies. And my name is Matt, and
my name is Oscar.
And in this episode, we will talk about trading strategies. Now, a year has passed, maybe 2 years, maybe something between. You have your system developed for basic needs, automated trading system, the engine itself, and you are now looking at the charts and you are thinking, okay, how do you actually make money with this? And of course, what do normal people do? They find online some trading strategies, for example, RSI, stochastics, low, buy low, sell high, and you start implementing or start following them. And believe me, there are thousands of strategies out there. MACD, DMI, RSI, stochastics, trend lines, this, how is it called? Anyway, there are so many.
Volume measures.
There are so many trading strategies out there. And you need to start with one. And tell me, what were your first strategies you...
Yes, first strategies, I started with stochastics, buying under 20 zone with a crossover, and I thought, when you open the chart and you see how the indicator goes, you can see that every time it's down and the stochastics makes a crossover, which mostly just indicates the candle is pumping up and it's going up, then you should buy. And if you roll back some 1 or 2 months, doesn't matter 1 hour time frame or 4 hour time frame, you see that mostly every time it crosses you gain some profits. But the next question then is, what will be your profit? Is it 1%, 2%, 10%? Sometimes it's 10%, sometimes it's 20%. And then you have these different time frames, and then you start to think, well, this crossover was nice, you gained 10%, but the next time you crossed, you got only 5%. So why does it happen? So maybe you choose the wrong time frame, or maybe you should choose another indicator. So you start to get some confusions. And then of course, you watch some tutorials on the internet and think maybe you have some mistakes in your system, or you have to backtest it much better. And then you understand that the people that try to suggest you, they actually have no clue how it works. They only give some kind of guessings how it works, but I didn't find any trader that has a clear overview of the history. How did the trades went? They only they try not to focus on that, but they are quite convinced that their strategy is the winner in the long run. But it turned out to be wrong, unfortunately or fortunately. So that's how you understand that's the baby steps. Those are the baby steps you have to learn.
I heard once somewhere about one trader who was sharing his experience. He said, well, the institutions look at you only when you have a portfolio of trades that you have done. And if you have them, then they know that you are actually learning. And I once recommended to one of my friends, well, if you want to actually start to learn trading, you just turn off all televisions, turn off all the news, and put some normal amount of money inside, something that will make you worry, and start actually, then your mind, your focus will start actually trying to find the strategies, trying to learn actually. So by also what Oscar was telling, so many people online are sharing their strategies, sharing their ideas, and blah 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 blah. But they don't actually do trading, nor they have also published their trading portfolio, trading history, trade history. I want a little bit extend also a little bit what Oscar said is when I first started to do some my own strategies, for example, let's stay with the stochastics in this state. It doesn't, any other indicator doesn't matter. There are no indicator that works better than the other. That's maybe how you use it, used with many other indicators. That's a little bit different. But if you are mind blown by a certain indicator, MACD, stochastics, or DMI, and whatever the CI or whatever other indicator you have there, or trend lines you have there, you have to know that the market will change its pattern. So, like Oscar said, for example, imagine stochastics starts crossing over from 20, starts rising, and then you think, okay, this is a buy zone. But then you start thinking, well, when should I sell, and when should I use a stop loss? And in another case, if you're building automated trading systems, the stochastics the 1 minute candle can go up and down, up and down. It can cross over 20, 50 times in a single day, maybe in an hour. It can cross up, down, and then you are thinking, well, when should I buy? Should I buy the first crossover, or should I buy the second crossover? And when should I sell? Should I sell at down crossing, or should I sell when the target is reached? And then you get so many questions at the screen on YouTube. Yeah, it works. It works fine. Buy there and sell there. But in real life, it's way more complicated and more difficult than that. And then it gets to the point. That was my first strategy. I was okay. I'm doing well. I'm like 20, 50 positive trades in a row. And then one trade goes down, hits stop loss, and then I'm like, okay, I should lower the targets a little bit. Then you lower the targets a little bit. Market turns down. Turns into bear market for a week or 2 weeks, and then 50 deals in a row only hit stop loss. And then you're thinking, well, should I maybe reduce the stop loss a little bit lower? Should I increase? It doesn't matter. You spend so much time thinking about the stop loss and or take profit or target percentage that you wish to take. You spend so much time on it, and it turns out later that it doesn't actually matter because there is a different science underneath it. You want to share?
Yeah. I think what people don't know about stop loss strategy is that if you hit your stop loss, whatever, it doesn't matter, 5, 10% or 20% or 2%, it doesn't matter that the next trade will be positive because...
so it doesn't guarantee the next trade positive?
No, it doesn't. The same with the positive trade. You got some positive trades. It's the same applies there. So, well, in that sense, nothing matters then. But what matters in its essence. So it will be a nice discussion in our next videos.
Yeah, sure. There's a lot of research. But I think what many traders, especially manual traders, what they're lacking the patience of doing backtesting. Now, there is a different approach from backtesting. When you look at candlesticks, they have these wicks up and down. There's the candle body, and they have these wicks up and down. When you backtest it on a chart, for example, on an indicator, RSI or stochastic, it actually does not matter which indicator you're trying to backtest. But in this video, we will just share the most common indicators so others can understand a little bit more. It doesn't actually matter because when there's a huge wick, for example, the price has dropped and then there's a wick down and then the price continues rallying upwards. And then you see RSI around, at that lowest point, RSI is around 20, 25, maybe 15. But the thing is that when that wick was actually, when the price at that moment was actually really, really low, you don't see that on the indicator, history indicator anymore. So it actually doesn't matter if sometimes it doesn't, you need more patience to backtest, but on the charts you cannot backtest it that deeply as you would with some tools that you could maybe develop or find online to rent. For example, you want a tool that can backtest multiple indicators, multiple time frames on all history. So when you backtest something on a bull run, everything will be positive. And I think also you need to backtest longs and shorts in the same pattern. So longs and shorts in the same pattern. So then you will know that if this strategy is truly positive, it will work also on shorts and longs also. Another thing is on backtests, chart backtesting, you don't see the actual bid walls. You see just the last trade, but maybe there was a 1% gap, wall gap, like they call it, the spreads. So basically there is a gap between the asks and the bids. For example, people who are willing to buy, willing to sell, and there's a gap between, let's say, 1% and 0.5%. In crypto, they can also range up to 5 or 10%. So in backtest, you don't see them. On chart, you don't see them. So if you buy when there is a 1% spread, you're instantly minus 1%. So you don't need. So at that moment, you don't need like if you're looking for a 1% target. At that moment, you need 2% for the price to rise, not 2%, and that's that destroys your chance by 50%, and then it gets a little bit frustrated or a little bit more difficult to actually earn something here. And so my suggestion is for anybody who is willing to actually start trading, you need to have a huge backtesting software, and that's one of the most important things, because backtesting softwares, backtesting engines can actually give you a lot more science. So have you used, you definitely have used backtesting, but what things did backtesting teach you or showed you, or what were the things that you find out when you actually started to backtest strategies?
Of course, the best backtesting results come in high volatility zones, and sometimes you have high volatility and sometimes you have extreme volatility. So that's what makes trading really interesting, is when you use high volatility trading. And I was also thinking about strategies. I think we can talk about strategies that work and don't work at all. And when I look on the internet, I see only strategies that don't work at all. And then I start to think why they are, showing or selling products that don't work. So it gets me confused. So I was thinking, why not to make a product that works and show people that it really works. It's not just, simple words or just some kind of predictions or guessings, and that you step out from the hope trading mindset into the real trading mindset.
Can you share a little bit more about how can you tell which strategy doesn't work? What do you know strategies that will not work in the long run? Of course, there are strategies that work in short period, let's say a week or two, but how can you tell that this strategy doesn't work?
Yes, I will show you in my screen recording videos. I know that many people won't like to hear that stop loss strategies doesn't work at all. I have tested at least 10 different modules of stop loss strategies. Starting one module only includes changing stop losses and targets. So it means that none of the stop loss strategies works at all. So what does work then?
I want to expand a little on stop loss strategies. Just the end of this video, this was a really good change for me. It happened maybe after the first year. We have developed an engine that works fine in seconds, sometimes milliseconds, half a second. And now is the time to develop these strategies, like we talked here. And this strategy doesn't work. Buy low, sell high doesn't work. Targets, stop losses don't work. I was curious, what actually then works? And I was in a point where maybe nothing works. Maybe it's just a complete waste of time. I was a little bit worried and frustrated. I know that traders use stop losses, and there are specific techniques that do need stop loss. But for ordinary and simple trader, we have a different story here. And especially for automated systems, we have a different story here and different approach here. So I will just share this story. I was walking around with my dog, walking on the street, and then I decided, okay, we have the backtesting software. And I just said, well, let's just make a test. Let's just buy every minute with a target of 2% and a stop loss of 2%. Let's just buy it every minute. Just buy it. Let's say Bitcoin has a history of 1.4 million minutes in the history. 1.3, 1.4, somewhere around that. It could be in today. So imagine you have 1.4 million trades backtested with a stop loss and a 2% target. So 2% versus 2%. And then you end up that the end profit, if you were to buy every minute and every minute of every day, you have a zero profit. And that just puts your mind blowing. How is it possible? Market goes up and down, left and right, and you have zero profit. And of course you have zero profit. You need to take off the commissions you end up losing anyway. But it's really close to zero. And I was like, how is that possible? It changed the overall thinking about exchange and trading itself. So then I was building new strategies with trailing profit take or trailing stop loss. It doesn't matter how people call it. I become aware that the people in classic stock markets, they use different words than maybe it's most popular in crypto markets. It doesn't matter. You use any terminology which you wish and what's more suitable for you. But then there has been a big change in strategy. Now, in the end of this video, I will tell you, just before we start the next series, about how easy it is to lose money and the lies and the fake information, the fake news about trading, and just to take your money. And at the end of this video, I will tell you a profitable thing which you can do. Now, just to keep your mind a little bit wrapped around, I think Oscar's already know what I will tell, but still. So, if you use a stop loss in a profit take or target, and 2 versus 2, you can use 3 versus 1. It doesn't matter. You end up with zero profit. And I was like thinking, well, what are the chances if I still buy it every minute? But there's always a chance for the price to go a little more higher. So imagine you hit a target, and as always it happens, the price started to go higher when you sell it, and when you sell with a stop loss, the price just rebounds and went higher again, and you're like, frustrated about this. Why does it happen to me all the time? And when the next time you decide, okay, now at this point I will not sell, I will wait for it to go higher and then sell, and then at that moment it starts dropping down. So the market is always doing opposite what you think at that moment. So, that's the funniest part of this. Sometimes you get frustrated, and then I start to laugh about this. How did he know it? But anyway. So imagine you have this profit target, stop loss, but then you change your strategy to like, okay, I will not sell at that point, but if it starts going higher, I will trail my profit take. I will start trailing it. For example, if my target is 1%, I start trailing it to, let's say, if the price goes a little bit upwards to, let's say, 1.5%, I will lift my take profit to 1.3%, and etc. You start trailing your profit. And then the backtest results show that by having a zero profit strategy, we end up with a 0.15% of average profit per trade. So you have a 1.4 million trades with each trade of 0.50%. Now, in most cases, it doesn't satisfy or doesn't earn back your commissions, your spreads. And keep in mind that a stopping trade, a losing trade, is more painful than a winning trade, because minus 10%, so let's say price goes down to minus 50%, you need plus 100% to get your profits back. So it still is a little bit of a losing or a zero cut strategy, but it opened up a window for new opportunities and possibilities for us to carry on with this research. You wanted to say something?
Yeah, it's really interesting to see the percentual changes, and how to understand how they work, I will also be sharing my video which I recorded about it's just simple mathematics.
Exchange mathematics.
It's
Look
really
into
it's all complicated things are simple. So I would say exchanges are just simple maths. There's don't need any trading knowledge. Don't need to read the news. You only need to know the basic mathematics, and that's all. And how percentual changes work.
And so in this end of this video, Oscar said a beautiful word. Exchange is not finding patterns. I think exchange is not even related to news or to any company performance. It's more related to mathematics, and it is a simple mathematical game. And just in this video I want to share just like an introduction to the next video series, which is the fake news and losing strategies, and how to avoid starting your first trading with losing. Is that accept exchange as a casino with red and green, this roulette where when you put your money on, whether it's black or red. In this case, it's green or red. You have exactly the same probability as this roulette. There is a 50% chance that the price go up and a 50% chance that the price goes down. In all cases, in all scenarios. So whether the price starts to pump, you don't know whether it will go up and down. You don't know it. You cannot predict it. You have a probability mathematical formula maybe you can use to predict it, but still you have 50-50 chance. And so there are AI systems which we will talk about. There are strategies that we will talk about, and how can you find these patterns we will talk about, that have a little bit more chance of finding the patterns where the price will increase, let's say by 60-40. Or maybe 65 to 35 chances of price increase, or drop opposite. So maybe there are, and you can find these patterns, but they will only give you the result of probability. What are the chances? Other than, it's 100% pump and anything else. Normally people will say if it's 100% pump, then they will have done only a couple of trades in their life. A normal investor or a normal trader or an experienced trader will look at it with, okay, it seems that the price will go upwards, but how can we secure the risk? How can we balance our budget? How can we balance our risk so that we don't lose too much, and we have the capability of winning more than we are actually losing in other trades? So basically it's all about risk management, budget planning, and also some patterns that do actually work, and having, let's say, having the eye to wait for the pattern, having the patience to wait for that pattern.
I have also made a video on difference between insurance companies, credit companies that give loans, and trading. So they all come down to the same probability.
Yes.
So so we'll just share all that content and all the research that has been done in the last 3 years.
So subscribe to the channel, ask questions in the comments. We will especially make a dedicated episode just answering your questions. And in the next video, we will talk about losing strategies, how to avoid them, and how, if you're especially a beginner, the things you should know just to avoid losing hard on the exchange, and how is the exchange's systems, CFDs and futures developed and created just to take your money. So thank you for watching, and see you guys in another video. My name is Matt, and
my name is Oscar. Have a nice day.
Yeah, and we are here to just share our knowledge. So have a nice day.